this meeting. My name is Elahe Radmaneshwar, for those of you who I haven't met yet. And this is a joint collaboration between myself and Kester Salimi. And the reason that we are doing this tonight is to look at Aberdeen market and to see how Aberdeen market has performed in the past and how was it before going to the lockdown, and see whether we can understand anything from those type of data for how future can look like for Aberdeen market. Unfortunately, we don't have a crystal ball, neither myself nor Kesser. It's just to study this market and try to understand what is it doing. I am a property investor, so it's very important for me to understand Aberdeen market because I heavily invest in Aberdeen. I'm also a property sourcer in Aberdeen, and I also live in Aberdeen. So that's where I am sitting for the Aberdeen market. Later on, after my presentation, Kesser will go through the mortgage products which are available for Aberdeen market, and I think he will also review how this product has changed since 2009 up to this date. Who we are, so we are a husband and wife team, which we also now have employee. But we have been, like many of you maybe on the call, we first become an accidental landlord back in 2005. Fast forward to 2016, it's a long story, which is for another probably one-to-one if we have a meeting together. But back in 2016, we decided that rather than being an accidental landlord, we wanted to educate ourselves and we wanted to become a professional property investors. So therefore, since then, we have mentors and coaches who are pushing us and helping us to grow our businesses. One thing that I forgot to mention is that if you have any question during this presentation, if you can kindly put it into the chat box, and by the end of the presentation, we'll go through the question and we'll try to answer as best as we can. So, right, so we have started in 2016, and our main strategy ever since has been a buy-to-let, because we are in the property market for an income. So our bread and butter type of property that we still do it up to this date are single let. We like them to be run done and unloved because then we can put our own stamp on it and bring them back to life. As a result of doing that and repeating this simple business model, we are now financially free, and this enabled us to do what you call them sexier deals, like converting a big house to 4 flats, or change of usage of the other house from a residential property to a guest house. We also have done complete opposite. So we also have converted what was being used as a service accommodation in the past to a residential. So we have various experience in the different type of property strategy. We have been fortunate to be awarded by property for the hard work that we put in. As all of you know, property investment is very simple, but it's not easy. And there's a lot of challenges that you have to go through. Many of them may be just for that person and for that person's financial circumstances, but many of them are in general to the whole property investors community. So as a result of all of the perseverances, we have been awarded in the property industry. We also have been honored to be asked by Scottish Association of Landlords to talk about our experience and how we moved from academic life to becoming a professional landlord. We also have been in the local news for the change of usage of a building. It's a block of flats which was being used as a service accommodation, and then it was being empty for almost 2 years, and we brought them those flats. We brought them back to life. Our main goal is now to help others. So this is what we are really passionate about: to help others to increase their portfolio and achieve what we have achieved for ourselves. I am very passionate about creating jobs in the local community that we are living in. And one of my other passion is to reduce the number of empty properties. And by doing so, we can provide affordable and modern housing for people from different walks of life. So that is what makes me motivated in the property industry. As a result of joint effort between ourselves and our sourcing client, who we helped them to increase the size of their portfolio, last year alone, we have managed to bring 52 empty properties back to life. Majority of them were buy-to-let, some of them were HMO, and a handful of them were also flip projects. I know a lot of you know where Aberdeen is. A lot of you are living in Aberdeen, but we also have some people from joining us from all over the world. So just to make sure that everybody knows where Aberdeen is located in the northeast of Scotland, and it's the third biggest city in Scotland. It's rightly known for, it is known as a granite city, and it's also rightly known as a capital of oil and gas in Europe. So a lot of you who are working in oil and gas industry know that in 2014, when when oil prices went down, Aberdeen property market suffered quite from that. Also, on the other hand, you know that there's a lot of industrial estates being developed at the same time. So a lot of oil and gas headquarters of these companies, they have invested a lot of money in Aberdeen. So when that happened, one of the goals that they have now set for themselves is, rather than Aberdeen being the capital of oil and gas, they wanted to change it to capital of energy, and their focus is to change it to capital of renewable energy for Europe. The other main industry that we have in Aberdeen, which is a lot of times being forgotten, is education and research center. Some of you may know, or may come as a surprise to you, that Aberdeen has the highest number of patents being submitted annually. So, and that is as a result of having 2 universities, one of them being 500 years old, 3 hospitals, one of them being the teaching hospital, 2 colleges, and a lot of R&D, which is coming from oil and gas industry. So all in all, this industry brings around 40,000 students per year to the city, which is a huge market for landlords. Also, we have fishing industry, which after Brexit, this industry has been improved. What is happening from the infrastructure point of view in Aberdeen? There's a budget of 10 billion for the infrastructure of Aberdeen, which is being invested by 2030. A lot of this money has been already invested. So, for example, the like of AWPR, which has been opened, or TECA, which is the state-of-art sustainable building. One of the other things that is undergo, and those of you who live in Aberdeen have seen it, is installation of wind turbine and having one of the biggest wind farm of its own in the world. Aberdeen International Airport has an expansion plan, and it's one of the airport in the UK which has highest number of national flights. The second harbour of Aberdeen is now expected to be open next year, which will bring tourists to Aberdeen as well as oil vessels. So it's going to be a cruise ships as well as oil. And then some of you may know that Aberdeen has the busiest heliport in the world. There are also regeneration happening in Aberdeen. So one of them is the Logie regeneration, for those of you who are from Aberdeen, which is that regeneration is supposed to finish. So it has been already started and it's supposed to be finished by 2022. There is a 250 million budget for Aberdeen city centre regeneration. For those of you who are interested in this number, there is a great website called Invest Aberdeen. So you can find all of those numbers and all of those details there. So going back to Aberdeen, so now we know Aberdeen as a city and what is happening around Aberdeen. To analyze what is happening for Aberdeen property market, one of the like any other market, one of the important things is employment rate. Because Aberdeen is based on jobs, and majority of people who are living here are high income earner, that's a very important factor. So what you see in this graph, red shows Aberdeen employment rate, and blue shows Aberdeenshire employment rate. Yellow is UK, and purple is Scotland. On the right-hand side of this graph, you see oil prices. So you see that Aberdeen employment rate on average, and most of the times, has been higher than national and international employment rate. Sorry, national and Scottish employment rate. In 2015, between 2015 and 2016, you see a sharp drop in employment rate. And if you look back at the oil prices, you see that between 2014 and 2015, oil prices dropped. Therefore, the employment rate also dropped as well. But what is interesting is that now, before COVID-19, oil prices were stabilized to a new price. And although it never went back to what it was before the oil prices crashed, but now employment rate has been went back to what it was in 2009. One other thing is that one question and one point of view is that a lot of people think Aberdeen job market is all of the jobs out there are directly related to oil and gas industry. And this graph, which shows the data from 2009 to 2019, show you how many of the jobs are being directly related to oil and gas. Orange bar shows the jobs which are indirectly related to oil and gas, and the gray bar shows the one that are induced by oil and gas. And what you don't see in this graph is the one which are independent from oil and gas. So you see that there is, although a lot of people think every job in Aberdeen is directly related to oil and gas, this graph rightly shows us that this is not the case. Another important factor about any property market is demand. So it's good to have employment, but if there is more houses than there is a demand out there, so all of those data are pointless. So what you see in this graph, it's a very crowded one, but if you pay attention to the red line in this graph, it shows you the number of units the number of new built units being built in Aberdeen. The data is from 2018, and in 2018 they were building just above 1,000 units per year, and they were adding that to the house mark, to the number of houses. Exactly in 2018, council has announced that they have 6,000 homeless cases in Aberdeen. So let's assume for a second that all of the 1,000 plus houses that they were building, all of that 1,000 were being handed over to council. And let's assume for a second that the population doesn't grow. So if the house builder could sustain that rate, it means that in 6 years' time, all of these homeless cases should be solved. There are two wrong assumptions here. One is very minor number of these houses are being handed over to council. And the second one is that the population grows, and unfortunately, the number of homeless cases also grows with that. So therefore, you see that there is more demand than supply. So Aberdeen has that as well. Before looking into more detail of how house prices has done in the last 10 years, what I want to do is to draw your attention to what has happened in the last 50 years to the whole UK property market. The reason that we are looking in this data for 50 years or so is because we can look at 4 financial crises. So one is the 1970 oil crisis, and then we have 1980, 1990, and 2008, which was a global financial recession. What you see depends. So sometimes before the crisis, property market was at the peak, for example, in 1970 and 1980. And then recession make that the house price index goes down. Sometimes you see that it slows down the recovery. And for 2008, you see that there is a sharp drop, but then also there is an increase. And then after that, there's another decrease. So what is happening after any of this financial crisis very much depend on where the property market was during that crisis, in which part of the cycle it was. I will go, if you don't know about the cycle, I will go by the end of this presentation to that. And so basically the reaction very much depends on where the property market was in that cycle. One thing that you need to consider analyzing this data is what happened in 2008 and what is going to happen because of COVID-19 is very, very different. 2008, banks were in they have problem and they were bankrupt, whereas now financially banks are in a very good position, and the whole economy has been kind of being on halt, and the economic crisis that we may have because of this lockdown is the nature of it is very different from 2008. So this is another graph that Savills has published beginning of April. And what they are discussing in this graph is that because UK property market in general was very healthy before going to lockdown, so they expect that, so what you see here basically is the number of transactions, so basically it's transaction rate. So as expected, because we are now in the lockdown and because not a lot of property transaction go through, so in first quarter and second quarter of the 2020, we don't expect to see any transaction, and we expect to see a drop in the number of transactions. If the lockdown goes away after that, they expect to see an increase in the number of transactions. So that is being called a V-shaped recession for property market. There's also discussion about having a U-shaped recession, and whether we will have a V-shape or a U-shape is very much depend on and how long the lockdown will last. There's also talks, there's also opinion out there that it may go like a W shape. So basically that will happen if we have two lockdowns rather than one lockdown. So having one lockdown, release the lockdown, and having another lockdown. But what is the reason that they think it will be like this is because UK property market in general was healthy. So there was a lot of demand and shortage of stock when the lockdown happened. So therefore they think rather than having the peak in July in the number of transactions, we will have a later peak during the year. So going back to Aberdeen property market, so the data that you see here is the average of house prices shown for Scotland, Aberdeen, and Aberdeenshire. So we'll again focus on Aberdeen because this is what we are talking about tonight. So you see that in 2009, Aberdeen house prices were going up, and if you remember from the average of the UK property prices, which were going down in 2009, so Aberdeen property was doing something differently. Interestingly enough, Aberdeenshire was going up with a very high rate. Then you see in 2014, if you see in 2014, between 2014 and to 2016, you see that the prices are slowly going down, but with a stable rate. And then after that, you see that the prices are going down. And now, before going to the lockdown, the prices has reached the national of Scottish prices. So, and you can't see in this graph, but it has been reported that for the first time ever in the last quarter, the positive increase has been shown for the property prices in Aberdeen. On the other hand, if your strategy is buy to let and buy to keep a property, it's not only important to look at rental. It's not only important to look at the purchase price, but it's also important to look at the rental value and how that changes over time. So what you see again here is the average monthly rental, which has been normalized by the time to let for Scotland and for Aberdeen. So you see that Aberdeen rental market was much higher than average of Scotland up to 2014, and then after that it went down, and now in some of the places, for some of the properties are lower than average of Scotland. So you need to look at this data with consideration. You need to understand what was happening in the previous Aberdeen market. So there are a lot of landlords that they were renting their property for such a high price without doing any renovation to the property, whereas the market has now changed and the tenants are more demanding, so they want a better quality property. Those landlords are not willing because they cannot justify why they should spend money. So those properties are not being let, therefore they affect the average of the rental market. But however, so we have the average of the rental, and we also have the average of property prices. So one question, as an ex-scientist, when you look at the data, you need to ask the right question to understand those type of data. By just looking any of this graph on its own, you may consider that maybe it's actually not the right time to buy in Aberdeen. But as many of you know, that the yield of Aberdeen has improved constantly. But yes, the property prices went down, and yes, the rent went down. But because the purchase price went lower than the rent, now in the past, having a yield of 4 to 5% was a good purchase in Aberdeen, and now it has been changed to 9 to 10%. So if you do a smart purchase, you can easily achieve 9 to 10% yield in Aberdeen. So I spoke about this cycle a lot during my presentation, and I don't know whether you have seen it in the past or not, but every property market goes through this cycle. So Aberdeen at 2014, before 2014, it was in the boom. So every property purchase in Aberdeen, if you wanted to be the winner of the bidding, offering 10 to 20% above asking price was very normal. So so if you are in that part, the green part of if the property market is in that part, you have low yield, but then the confidence in the market for purchasing is very high, and then something may happen, like for example, oil prices crash, and then that brought Aberdeen property market from the boom phase to the slowdown and to the slump. So what has happened in Aberdeen market in the last 5 to 6 years now, it went through the phase of a slowdown and a slump. And before going to lockdown, we were in the transition between slump to the recovery. So there was more confidence in the market. There was, and people start buying. So there were a couple of reasons behind that, because as you have seen, the employment rate went back up again. So there are a lot of people who could afford to buy houses with confidence. So we were in the transition between the slump and to the recovery phase, and there were also more investors investing in Aberdeen when COVID-19 happened. So whereas the rest of the UK, they were between the recovery and in a lot of places, they were in the boom phase. So it is expected that Aberdeen response to COVID-19 would be very different from the rest of the UK. So again, as an ex-scientist, when you look at the data and you look at the average, you need to understand and zoom in and understand the city that you are investing, which part of this phase it is, which phase of this cycle it is, and draw the right conclusion for the city that you are investing in. So one last point from myself. In that property cycle, there's always a right strategy for it. So for example, when you are in a slowdown and recovery phase, one of the best strategy is buy to let. So buy to keep it for the property until we go back to the boom part of the cycle. So, but in every part of the cycle, one strategy that works always well is make money when you are buying rather than trying to predict what future has for that property or for that market. So as an example of what I mean is that we recently have negotiated a property, a one-bedroom property in AB25 postcode, and you see that the average price in that for one bedrooms is around 80,000. We managed to negotiate that to 55,000. It means that that client of us is creating an equity of 38% at the time of purchase. So it means that that client has a cushion, a very good cushion to protect herself no matter what happens to the market. Same example for a two-bedroom, which for in Woodside, which is an area that we buy for middle-class earners, which is in good demand for rental. Again, the average two bedrooms in that area is around 100,000, but we usually buy around 60 to 70. So creating a 40 to 30% of equity for either ourselves or the investor's client. So before I hand over to Kessler to update us about what is happening in the world of mortgage, because it is all good that property prices are low, to understand which part of that cycle we are, but also lending is a very important part of it. Just to conclude, so in our opinion, COVID-19 will slow down Aberdeen property recovery, may slow down Aberdeen property recovery, but we don't expect to see a huge reduction in prices. We expect to see higher demands for buy-to-let for a couple of reasons. One is a lot of landlords will sell, a lot of portfolio landlords will sell because of all of the changes in the tax, and also because of all of the changes into the tenancy agreement. Also, we have already started seeing that because of students don't feel any more comfortable living in student blocks. So they want to live in a smaller units that the risk of contamination is lower. And also there may be some government guideline for that. So we shall wait and see. And also sadly, because a lot of couples will go different ways after lockdown, so that will also increase the demand for one bedrooms property. And as I said, as far as you're making money at the time of purchase, independent of what strategy you are doing and which part of the cycle you are, you always are doing a right purchase. So that is from me. I pass on to Kessler to update us about mortgage market.
Thank you very much, Ella. That was really good. I really enjoyed that. Ella, before I start my presentation, I think we'll go to the questions first. So we've got a few questions in just now. I'll ask them on their behalf. So we've got one question from Sam Dyer. He's asked, what areas of Aberdeen do you prefer or like to invest in?
Well, everyone has a different appetite for investment. I personally like to offer properties for middle class earners. So my focus has never been oil and gas workers. So I like to offer properties to the key workers, the near hospitals, for teachers. So this is type of properties that we buy. So the average price the average properties that we buy prices are very similar to the average of the Scottish market. So the like of closer to the city center. A lot of people know this, so I'm very keen on buying in Tory area, for example. and we almost bought half of Tori so far. But so this type of average class, where the average class likes to live. So this is our strategy.
Okay, and do you have a rough price point there as well?
The done-up value usually in those areas for one bedrooms maximum is around 80K. For two bedrooms is maximum 120K or so. So that's because we are interested in cash flow and we are interested in higher yield, so that this area works better for our strategy.
Okay, great. Thank you very much. Hope that's answered your question, Sam. We've got a question here from Tajinder as well. So what is the average purchase price and average rent for a two-bedroom property in Aberdeen?
Again, so because some of you may know Aberdeen is one of the most expensive city to live in the whole UK. And also we have the highest number of millionaires. So depends on your budget. So you can, if you are looking in the middle class, so at the moment, a two-bedroom between 550 to 650, if it's a good quality product, is the rent that you will achieve. And the prices is anything from 85 done-up value to 120-ish done-up value. But then, again, you can have a one-bedroom property in Aberdeen for 300K if it's a certain postcode. So it's very difficult to talk about average, but if you are looking for yields, these are the typical numbers that you are looking at.
Okay, thank you very much. Hope that's answered your question, Tajinder. We've got a question here that was sent privately. What part of the cycle is Aberdeen in just now, do you think, in this year ahead?
So it was between slump to recovery. So it was moving from slump slowly to recovery. That was what was happening because of all of the employment rates going up again, which COVID-19 has stopped that for now. So I personally think the recovery of Aberdeen will be a little bit longer than expected.
Okay, fair enough. Thank you. And Barry Simpson's asked, 9 to 10% yield, is that after all buying costs?
Yes. So this is what we call it a gross yield. So basically, purchase price plus all of the buying costs, and if the renovation is needed. So that is the total cost for us, and then rent multiplied by 12 divided by all of your costs is the yield that you're expecting. That is how we calculate that, and we call it the gross yield. So okay. Tax is not included because it's very difficult to know every person's tax offer.
Okay, that's good. That's quite a strong yield actually. I didn't think the yields were that high there, to be honest. That's quite high, a lot higher than a lot of the areas, to be fair.
So you can buy properties which is £1 million worth of a property, and probably previously was much higher than that, and your yield is very poor. But if you buy it for the middle class earners, which are the highest number of people who are renting as well, you can achieve good yields.
Okay, good. So Linda's asked a question as well. So what is the average rent and corresponding yield on a two-bedroom valued roughly at 115,000?
115,000. If it's your done-up value, usually your rent is about 595-ish. So you can. I don't have the calculator with me to do the math. It's probably 8% yield, I believe.
Okay, fair enough. Hope that helps you, Linda. And Michael's asked a question: do you think the done-up value will drop by more than 10% after the lockdown?
I don't think so. There's also a study from Savills that they have predicted that in the next 3 to 4 years, we will have 5% increase in the prices. What I forgot to mention is they also have studied the commercial property. So because also one type of property that has suffered in the last couple of years has been commercial properties. And before going to lockdown, again, there was a lot of companies moving around. So also commercial properties start looking stronger, which relate also back to residential property, because it means when there's more confidence in the world of commercial, means there's more jobs, and then it means that prices will for residential will stay steady.
Okay, fair enough. Thank you. And I think that moves on to the next question quite nicely, actually. So Jennifer Olivia has asked, what is the appetite for the council for commercial to residential conversions?
In general, the appetite is there. So, but you need to be mindful of, so there is a huge budget for converting Aberdeen city center, so regenerating of Aberdeen city center. In Aberdeen city center, we have a lot of beautiful granite building there, but a lot of them are listed. So, and any listed building comes with its own challenges. So in general, if you're outside the conservation area, the appetite is okay. It's not any different from any other part of Scotland, but in the conservation area, you need to take that factor of everything being slow, and three different department of council needs to come to a conclusion into factor of your costs.
Yeah, okay, that's good to hear. Angela Scott's asked, do you always buy on interest only on buy-to-let mortgages?
Yes, we do. Yeah, yes, because as I said, we buy for cash flow and income. So and now we have grown the property portfolio to the extent that at some point, if we need to pay some of the mortgages, we can sell some of the property or part of the portfolio. So we do that, but it's not a financial advice. It's our own personal decision.
Yeah, of course. Okay, that's good to hear. And Stephen Clark's asked, what effect do you think the recent oil price crash will have on the market and the recovery?
I know, Stephen, you will ask this. So it's an interesting one. From last week, so from last week, the prices went back up again. So we went to the point that people were paying, all oil companies were paying people to take away the oil in America to something more reasonable. The biggest customer for oil and gas is aviation and transport industry. And while we are in lockdown, nothing is much happening. So there is an effect out there. So it really depends on how long we are going to be on lockdown and what is the consequence of that, in my opinion, on airlines, other transportations out there. So if it's short enough, and then we go back to start having normal life, the effect will be very different from the fact compared to if it's going to be a very long lockdown and reduce traveling. But I generally think probably we shall expect to see oil prices go back into normal, what it was before COVID-19, in a year or so, a year or 18 months.
Okay, good. I think that's kind of true of everything, really. The longer this lockdown lasts, the more effect it's going to have on everything, really, not just the oil prices. Okay, that's good. I hope that helps, Stephen. So Callum Thompson's asked, are there any defined student areas in Aberdeen? If so, do you find that you can push up the rents in those particular properties? So he's saying an example in Dundee around the Perth Road, which is like the West End. Property rents have been inflated due to the large number of students wanting to live there.
We have a street called King Street in Aberdeen and around that area. So because there are two universities, so students of Aberdeen University, they like to live around King Street and closer to the city center. And then the student of RGU, they like to live in a city center and slightly closer to to RGU. This may change, to be by the way, because students in the past were very keen on using public transport and living closer to the nightlife. But now, because of the virus, for a year or so, they may not be so keen on using public transport anymore, and they might want to move closer to university. Whether we can push the prices or not, it very much depends on what student accommodation are going to do. Because previously, how the market was, first year student or international students that they don't know much about Aberdeen city, they were living in resident hall, and then from second year onward, they wanted to save some money, and they were moving to single let or HMOs, small HMOs. But if all of the student accommodation all of a sudden either shut down or reduce the number of people that they are taking in, it means that more demand for private sectors, and yes, of course, the prices will go up. But it's something that we need to wait and see when September students are coming back. But at the moment, I know that at the end of this month, all of the student blocks are shutting down. So the international students who are left behind, they are moving to private residence.
Okay, that's interesting. I suppose long term, we don't know how the effect will be on these sort of student blocks and HMOs as well. Like, students might not want to stay in these properties anymore whilst the coronavirus goes on.
Yeah, I agree. So probably, but until we forget about all of this contamination, so probably they are less popular. So probably I think HMOs of 3 to 4 beds, they will become more popular within students comparing to living with, I don't know, 100 other students in the same block.
Yeah, definitely. Okay, I hope that helps, Callum. Vladimir has asked, in regards to the Saville report that he showed earlier, he missed that. What kind of transactions did they look into exactly?
Residential property transaction. Are you talking about the V-shape?
Yeah, the V-shape one, yeah.
Residential property transaction they are looking into, and basically the transaction rates.
Okay, great. Okay, Vladimir, I hope that helps. Rudy's asked as well, is there any location in Aberdeen that you wouldn't recommend investing in?
Not necessarily. Aberdeen doesn't have a bad postcode. There are some streets that, for example, Victoria Road, for example, which is part of Tory, beginning of Victoria Road is not that popular, but it's not to exclude the whole Victoria Road. So beginning of Victoria Road, there are a lot of shops underneath the properties, which in general, you can tell better than me that lenders are not happy with that. Also, some of the tenants don't like to live above a bar or something like that. We have the same thing in Georgia Street. So Georgia Street's property, a lot of them, they have a lot of barber shops or takeaway underneath. So a lot of tenants, they don't like to live in this type of property, and also lenders, they don't like it either. But it doesn't mean that they are bad areas.
Okay, right, that's good. I hope that helps, Rudy. Brent's asked, do you think service accommodation providers will change to buy-to-lets and put a squeeze on the rental market?
I don't know how much you know about service accommodation of Aberdeen. So, for example, if you remember from my presentation, one of the building that we worked on, it was service accommodation in the past, and we now run it as a buy-to-let. So a lot of service accommodation providers has already given up on Aberdeen market, because what has happened is that there was a lot of hotels, brand new hotels being built, and then we had the oil crash, which caused property crash in Aberdeen. So a lot of bigger service accommodation provider, they have already moved to buy-to-let in the past. I assume, I think a lot more also will move in. I have heard it from the letting agent that we work closely with, that there's a lot of demand now to put service accommodation for rental. Whether it will stay like this or not, again, if I am traveling and I'm still cautious about the contamination, I like to stay in a service accommodation rather than staying in a hotel sharing with another 50 people the entrance. But it's something that the society will decide about it.
Okay, that's interesting. I hope that helps, Brent. So Ian's asked a question. So this is excluding COVID-19. Just let's just say we're just in so hopefully regular times again. There's been lots of new student blocks built in Aberdeen. Do you think this will hurt private lets?
Yes and no. The type of students that they go to the student block, generally you don't want them in your private rental. They're usually first year students and they have no idea of renting and they like partying a lot. So I think in general you don't want them in your private rent. But it has affected the larger HMO in Aberdeen, I should say. Whether it will have more effect on it or not, the new property market, people are not so keen on making larger HMO because they know the market what market demands at the moment prior to COVID-19 was 3-bedroom HMO. So either if there are more than 3 students, they prefer to live in a student block. And if they are less than that, then they want to live in an HMO.
Okay, great. I hope that helps, Ian. Student Kant's asked a question. What's your views on investing in areas around Aberdeen like Kingswell, West Hill and Cove?
What's my views? If we invest in those areas, I would like to invest in family-led, like houses rather than flats. So that's my personal preference because those are family areas and family wants to live there. So do we invest in those areas? Not at the moment. Will I invest in those areas in future? Probably yes.
Okay, interesting. The questions keep coming thick and fast, so I'm going to let people answer them because I think people are going to be keen to hear about what you're going to say. So Danny's asking, what do you do with your properties during the summer months when students leave, or even in the current times when students have got up and left? Has this caused you any problems?
We are in the opposite part of the cycle. So we now have, so today, for example, we have 2 students moved to our property. And they're not going to leave because they're international students. So they want to stay in Aberdeen during the whole summer. So we are more keen to work with more mature students that they are staying over summer as well. So let's put it that way. We don't have any property which is student only. So there's a lot of investors out there that they have HMOs that they serve students. We don't have this type of property.
Okay, fair enough. Hope that helps, Danny. And Ian's asked, what kind of strategy would you use for the Bridge of Dawn?
Buy to let for now. If you find a right property at a very right price, you can also do a flip there because it's an area that people want to live in. But then for Bridge of Dawn, you need to be mindful that there's a lot of also new build that they are building there. So you should be able to compete with that. So basically your done-up value should be considerably lower than those new builds.
Okay, that was great. Hope that helps, Ian. Right, Ella, that was all really good. I think everybody's really enjoyed all the questions on your answers as well in particular. I'm going to pass you back as the host.
Do you want me to keep the presentation or do you want just to go to the speaker mode?
Yeah, you can just go to speaker mode now. That'd be fine. Yeah. People will be sick of me seeing my face there. Okay, guys, I won't take up too much of your time. I know kind of we're planning on just an hour or so. I'll cut my kind of presentation slightly shorter. Obviously, I think the main thing is wanted to kind of listen to Ella today. Over the last 10 years in the mortgage market, the main changes have happened around sort of 2016, 2017. In 2017 in particular, the Prudential Regulation Authority, they brought out some rules, and really this is off the back of the financial crash. This is how long it took them after that to actually bring out these rules, was that if you had 4 or more mortgage properties, they would have to underwrite all your properties and you'd be classed as a portfolio landlord. So if you've bought any properties since then, or if you're kind of lucky enough to be classed as a portfolio landlord, you've maybe seen a difference in the way that the kind of underwriters underwrite your properties. So what they're actually looking at is how you're managing your business as a whole, because technically property investment is a business as well. And they want to see, are all the properties cash flowing? Are they all within kind of the loan to value, usually 75%? The main kind of effect of what's happened here is that a lot of lenders pulled out of that market because they felt that it's the same amount of work for them to do a portfolio case as it is to do a regular buy-to-let for somebody that's just got one buy-to-let. So a lot of lenders in particular just decided that they don't want to lend to portfolio landlords anymore. So once you have 4 or more buy-to-lets, your lending options do become limited. And then after that, once you've got 10 or more, then you really are classed as kind of a professional landlord. And it's more the specialist lenders that you'd be looking to get lending from. Around the same time as well, the rental stress tests, they were increased from 125% to 145%. So the mortgage payments would have to cover the rent at 145% coverage. So that extra 25% was really to cover the interest rate relief that was going to be brought in from 2016 into kind of full effect, which is this year. Avoid periods and any expenses that you may have over them years. And it's also stress testing at not today's rates, but potential future interest rates of 5.5%, because who knows what interest rates will be like in the future. So the main change that's happened, the main effect that's happened is that if you're buying buy-to-lets, if you're buying really low yielding properties, you'd maybe struggle to get the full loan amount. So Ella talked about, you can get properties in Aberdeen for £1 million. Potentially now trying to get a buy-to-let mortgage on that, you'd probably struggle because the rent wouldn't have increased in value, the same sort of value as what the property price would. So, but if you're talking at kind of good yields of like sort of 8-10%, you're not going to have a problem financing them sort of properties. So really yield is very important now. This was really kind of brought out for areas like Aberdeen where property prices were increasing quite fast, and also the southeast like London and southeast there. So people were buying because they're speculating that property prices would just keep increasing, and then they just refinance to 75% again and just take all that money back out and then just buy another property. But the problem there was that the rents weren't increasing in line with that. So definitely buying for yield is quite important now, as well as capital growth. The other main change that we've seen in the last 10 years is that the buy-to-let rental figures that were taken off home reports. So initially they used to be on the home reports, but they no longer are. And lenders want their own valuations done. So if you do have a valuation on a property, like a regular valuation or a home report, unfortunately you can't use that for lending. The lender would want to instruct their own valuation. They would charge you, or there might be a free valuation, and they'd instruct their own lender to come out and actually do a valuation on the property. So that's kind of the main changes. The current main changes that we've seen kind of happening is that specialist lenders have, some have withdrawn from the market. In particular, a lot of the mainstream banks have had access to additional lending just now, which has been good. The government's tried to kind of push that and get lending kind of going because they didn't want kind of the problem happening of what happened in 2008. But some of these specialist lenders don't have access to that lending, unfortunately. So we've seen some lenders like Together, Vida, these sort of lenders have kind of restricted lending just now or withdrawn from the market completely. Holiday lets, so Ella talked about holiday lets. She said that there's not really much of a market in Aberdeen, so I won't kind of dwell on that too much, but a lot of the lenders just now aren't lending on holiday lets. There's only really 2 lenders that are lending on holiday lets just now, and really they've restricted loan to value down to about 60%, and they're just wanting to see what your cash flow is going to be like, should there be any void periods, and for extended void periods of potentially 3 to 6 months or even longer. Some are looking at up to 18 months as well. 80% loan to value products have all pretty much gone in Scotland just now. So the new norm is 75%. You've maybe seen some press coverage recently where they've said, lenders are lending now as low as 50%. The main reason why they were doing that was because they were struggling for demand, struggling to kind of cope with demand even. A lot of lenders were struggling the staff were working from home, illnesses and the mortgage holidays. So as a way of kind of curbing the demand, they've restricted loan to value to around 50-60%. And as they've started to kind of get back into the groove, they've moved back up to 75%. So the good thing is most lenders are now lending back up to 75%. To keep the property market going forward during the lockdown, a lot of lenders are starting to do desktop valuations, which is good. There are some restrictions with some lenders on this, in particular HMOs. Some lenders aren't doing desktops on flats and new builds, which are the main three. But quite a few lenders are doing desktop valuation on flats now, which is good. Over the last month, we've seen the base rate get dropped to 0.1% as well. So a lot of people have been happy about that. I think, oh, great, the mortgage rates are going to drop down. Unfortunately, we've not really seen that happen. So far, rates have actually stayed about the same, and actually some lenders have actually increased their interest rates as well. So in the future, we might see that filter down into mortgage interest rates, but at the moment, unfortunately, they're kind of around the same, if not higher than they were even a month ago. Mortgage holidays as well. We are seeing some specialist lenders kind of look at if you are taking out mortgage holidays. So if you're looking for lending at this particular point in time right now, a lot of the specialist lenders in particular are asking, have you taken a mortgage holiday? And I can understand the rationale as well, because if somebody's taking a mortgage holiday pretty much straight away from day one, a lender will be potentially worried about can you cope with void periods of potentially 3 to 6 months? So they will want to kind of check, do you have surplus cash to afford any void periods as well? And some lenders are actually asking you to sign a declaration to say that you're not going to take a mortgage holiday out with them once you do a remortgage or a purchase. In particular, lending options have been still quite good in personal name, not seen much of an effect on there. So most of the lenders are back in the market on personal name. But I know most property investors now are looking at limited company. The options are a bit more limited. So I'll cover off a few of the lenders that are lending in the market rather than kind of covering off everybody. And this isn't exhaustive. There is actually a lot of other lenders out there. I'll just kind of cover off some main lenders. So Lend Invest, we spoke to them today. They are still lending in Aberdeen up to 70% loan to value, which is good on buy to let. They do have some restrictions there, but in Maine they are lending. Paragon as well, they are lending up to 75% in Aberdeen just now, and they are doing expat lending too, still currently. Vida together, we've already talked about that they're not currently lending. So they've suspended lending just now and they're just waiting to see how the market pans out. And then hopefully they'll come back into the market once it all kind of smooths out again. Aldermore is still lending up to 75% as well, which is good in Aberdeen. TMW up to 75%, which is the Mortgage Works, so which is really good. They're part of the Nationwide group. The mortgage lender, they are still lending up to 75% in Aberdeen, but I would be slightly wary of the mortgage lender. They get their funding on the buy-to-let side from Shawbrook, and really I think they're just looking for quite high-value properties and nothing too quirky either. So if it's anything out of the ordinary, I potentially wouldn't be looking to kind of place that with the mortgage lender just now. And finally, Kensington as well, they're lending up to 70% just now. But that's only on remortgages at the moment, not on purchases. So ultimately, there are lending options for yourselves just now in Aberdeen. Ella had asked me to talk about expats as well, because I know there's some expats on the line today. You do have options just now. I think some of the problems actually happen when expats are buying through a limited company, because that limits your options even further. So if you're buying in personal name, you've got access to lenders like NatWest and Skipton International. But in limited company, you do still have options with some of the lenders just now for expats. Foreign nationals, the lending option for foreign nationals has kind of really been limited just now, unfortunately. So personal name would probably be your best option if you want the most lending options available to you. Limited company right now, I couldn't see any options for yourselves, unfortunately, for foreign nationals. But personally, like what Ella says as well, I personally see this as being a short-term strategy for a lot of lenders, just kind of restricting the lending. And once we kind of get back to normality, a lot of the lending options will open back up for yourselves in Aberdeen and the whole of Scotland again. So that's kind of been a whistle-stop tour for you guys. I think there's been some questions, Ella, as well. If you maybe want to kind of go through them, that'd be great, please.
Yeah, so it's a comment, but also I turn it to a question. So desktop valuation. So obviously it's not the best. It's not the best valuation for investors. Do you think this will change in the next month or so, or do you think it will stay for now? That the lenders are keen on doing desktop value. Well, not the lenders, but lenders and the surveyors that they work with.
Yeah, so interestingly, a lot of the property remortgages and purchases that we're doing just now, a couple that we've had where they are eligible for desktop valuations, they've spoke to the surveyor, and the surveyor's actually said that actually we prefer to do a physical valuation. And I think in particular, buy, refurbish, refinance ones, I know a lot of people are doing, where a surveyor might want to see inside the property. They may be saying that actually, we would rather do a physical valuation than a desktop. So it's not the fact that all properties have to have a desktop valuation, and there is a potential that you could actually hold off as well and say to the lender that actually I'd prefer to have a physical valuation done, because a lot of lenders are saying just now on desktop valuations they can't be appealed. So if you're not happy with the desktop valuation, unfortunately, then you're stuck. So if you do want to get a physical valuation done, hopefully if the lockdown starts to get eased off and surveyors can get back out on the road, then maybe you can actually get a physical valuation done instead. But going back to kind of desktop valuations, some are asking for before and after pictures to see, what sort of value you have actually added to the interior of the property as well as the outside, to help, if you're trying to kind of get a higher valuation. Okay.
And you covered this. So is there any lender out there for international investors at the moment?
Yes, so in limited company right now, I couldn't see any, unfortunately. Joey, I think that is yourself that's asking that question. I didn't kind of ask all the lenders, I just asked the main ones right now. But I think once this current sort of, this current lockdown is over with and some of the other specialist lenders come back into the market, I think them options will open back up again. But currently right now, I couldn't see any options for international investors. Expat lenders, expat clients, they are still available, but not for international investors, sorry.
And there's a question from Stuart Kent that, do you happen to know what loan to value TMW offers once you have passed the 750K lending from them?
Yeah, I'm not sure about the 750K, but definitely if you've got more than 10 properties, they will want you to restrict it down to 65% loan to value, and that's overall. So you could buy your new one at 75%, or if 80% comes back, even 80%, but as an overall portfolio, they'd want you to be at 65%. So as long as, your other properties have kind of drop down, or the loan to values drop down over that time, you could still buy your future properties at 75 or even 80% loan to value.
Excellent. And Mohammed asked about Sharia lenders. Are they still available for international investors?
What sort of lenders, sorry?
Sharia lenders.
Oh, Sharia in Scotland, the only one at the moment is Al Rayyan. I've not had any experience with Al Rayyan myself. Feedback I've had from people that have gone to them directly, they're not the easiest to deal with, unfortunately, but they are still available, Al Rayyan. Down in England, there are other options available, like we have Gatehouse as well. They're quite a good lender, and there's a third one, I can't remember the name of them right now. So yeah, there is Al Rayyan Bank that you can go to for Sharia lending.
Okay. Okay, so I think we have answered most of the question.
I just want to, sorry, Ali, to interrupt there. I just wanted to kind of cover off bridging and development finance. I know some people maybe be wanting to ask about that. I'll just kind of touch on that quickly. So, bridging and development finance is still available, but loan to values, they have really kind of restricted them down to kind of 50 or 60%. and they're really kind of wanting to look at what your exit strategy is. And if your exit strategy is a sale of a property, they're potentially not going to be so keen on that right now. They'll probably be more keen on you going towards the refinance onto a buy-to-let. So I hope that helps anybody looking for bridging or development finance.
Let me see. So the question is from Ian. Does a Paragon or Lending West consider limited companies?
Yeah, both do. Both Paragon and LendInvest. So all the lenders that I mentioned earlier on, like LendInvest, Paragon, Aldermore, TMW, so I'll just get to my list here, the mortgage lender and Kensington, they will all consider limited company.
Okay. And just to, so the, you touched base on that. So a lot of these lenders that they're not lending at the moment is not because they are worried. Is it because they are worried about what is going to happen, or is it because they have furloughed many of their staff and they have a high volume of other like business loan and everything else to deal with? So what is the reason for that?
Yeah, it's a mixture of everything, to be honest. I think we'd be lying if we said that lenders aren't worried. They definitely are. They've already restricted loan to values down to 75% from 80. So some lenders like that, some that have withdrawn out of the market completely, they're potentially worried about liquidity, the likes of Vida and Together. A lot of these specialist lenders don't have access to the government funding that's available just now to the banks. So that's why, to kind of cover their liquidity and also the demand for mortgage holidays, they've restricted lending. But yeah, a lot of the mainstream lenders in particular, it's been due to kind of staff working from home and being diverted to other places, answering phone calls for mortgage holidays. Like apparently now 1 in 7 people now has a mortgage holiday in place. So that's a huge amount of the population already. And they've had to kind of struggle with answering all these extra phone calls and all that demand. But again, we've also seen that a lot of these lenders have now moved back up to around 75% again, which is good. And ultimately, I think a lot of these measures are just so short term because of this lockdown. Once the lockdown is hopefully removed or eased slightly, I think we will see more and more lenders move back into the market, because ultimately they still want to lend, they still want to make money, which so I definitely see that more of them will come back.
Yeah, well, bank earns money by lending money, so that's
Exactly.
their basic of their business. So a question from Angela. I think she's asking, would you recommend buying as a limited company or sole trader? And I think what she means is, are there more lender available for limited company or sole trader? Because the rest of it is a content question. So
yeah, exactly that, Ella. So yeah, definitely, that's something that you should take tax advice on, whether it's which situation is better for you, limited company or sole trader. But in regards to lending point of view, as buying in your own personal name, there's a lot more options available. The lending market is tenfold what it is in limited company. So, and also the rates are a lot lower as well. So as a rough guide, you'd probably be at least kind of a 1% lower in personal name potentially. Depending on what sort of product you're going for. But you've got a lot more options, the rates are lower, and in particular in Aberdeen, where your options are more limited than even the rest of Scotland, buying in personal name, you do have even more options. So you talked earlier on as well, Ella, about buying above commercial property, even ex-council, all these sort of things. It's a lot more difficult to get this sort of finance in a limited company. In limited companies, most lenders want you to have, standard construction, not near commercial, nothing weird and wonderful. Whilst in your personal name, there's a lot more options available there to get finance on these type of properties.
And another question from Ian. He just wants to clarify that Paragon and Lending West, do they lend in Aberdeen? Because he heard from other broker that they may not.
We spoke to them today and both said that they would. So I spoke to the BDM at Paragon themselves, and LendInvest, I spoke to their business development manager as well, and they both said that they are lending in Aberdeen.
Okay, excellent. Thank you so much, Gesser. So very informative as always. I put up, if it's okay with everyone, so I put up our contact details. If any of you would like to Can you see my screen?
It's slightly small though. Can you? Yeah, there you go. That's perfect.
Yeah. Okay. So if any of you would like to connect with us, and if we can help you in any form or shape, please do not hesitate. So these are my self-contact detail and also Keser's contact detail. As we touched based upon, for next meeting, we have John from Scottish Association of Landlords. So I'm sure that if you have ever listened to him, he's a very great speaker. And then also Scottish Association of Landlords had done a lot of work since the lockdown has started. So I'm looking forward to listen to him. But also if you want anything else to be covered, just let myself or Keser know, and we try. I'm sure Keser will do his best to find the suitable person for that.
Yeah, likewise. I think thank you for organizing this today. To be honest, it's been all you that's done this organization. It's been really interesting to hear about the Aberdeen market. But yeah, if anybody has any other ideas of stuff that they would want us to cover off, and in particular, John Blackwood, there is a lot of uncertainty in the market just now, and I think him in particular, I'm sure he can answer kind of a lot of the questions that we're kind of worried about just now. So if anybody has them, we can maybe kind of pose them to him on the day as well. That'd be good.
Excellent. So thank you, everyone. Have a great evening, and until the next meeting.
Thank you.
Thank you very much. Bye-bye.